Hello and welcome to Pro Trader Strategies Market Commentary for Wednesday, September the 5th. My name's Eric Wilkinson, and some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. And remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We've got services PMI coming out of Great Britain at 54.3, expected to be 53.9, so slightly higher than expected there. That is good for the economy. Anything over 50 is expansion. PMI is Purchasing Managers Index. And then we got retail sales out of Europe came in at negative 0.2%, expected to be negative 0.1%, so slightly worse than expected on that front. And then here in the United States, we got trade balance, which nobody ever looks at, but that's really pretty much some of the only economic data we got out of the United States. And it was in line with expectations at a negative 50, or basically we are importing more than we are exporting. So 50.1 billion, expected to be 50.2 billion. The average median area right there is around negative 40. Right around negative 40, 41, 42, something like that. So it's a little bit higher than expected. Clearly, tariffs aren't really doing a whole lot as we're seeing the trade balance still in negative territory. All right, so not a whole lot to say there on that economic front. One thing that there is going on is like Jack Dorsey and some Facebook executives in front of Congress talking about all of the craziness that goes on with those sites. So we'll have to see what comes out of that. But that being said, that is bringing down the FANG stocks, which is Facebook, Apple, and Netflix, Google, and those type of stocks are all coming down. So the tech sector is really getting hurt right now. And the blue chips are doing very well, which we'll see here in a minute. Now, crude oil is back below that 50 Fibonacci level. It looked like it was going to hold yesterday. Today we kind of get a little bit more follow through down below that, coming right back down to that value where point of control that's where the most time and volume has been spent. That is where the market perceives value. And we could say the market perceives value right there at around $68. So coming back down, we're still a little about $2 or about $1 higher than that number. So it's going to want to migrate there now that we're below there. Especially if it settles below that 50 Fibonacci and the 50-day moving average, which happen to coincide together. And then we got gold futures. They're moving higher as it's pretty much a flight to safety in a sense. Yesterday we saw a lot of downward pressure in gold while Bitcoin got one of its biggest moves in the last several weeks to the upside. Today we're seeing a flip of that where Bitcoin is kind of losing a little momentum, and we're seeing that being supported in gold, and gold is back above that psychological level of 1200, which I've talked about what seems like till I'm blue in the face. Then XRT, this is what I'm talking about, a big pullback today in Bitcoin, as you can see, right back down to the value, but not a whole lot of volume going on at any of these levels, which is a little bit disconcerting when there's no real push in either direction. All right, so bonds unchanged. All right, they're up one tick, but at the end of the day, they are unchanged and right at the point of control. That's one thing we're seeing right now. A little bit of a theme going on is everything wants to migrate back to the point of control. Some of that has to do with we don't have any economic data to go on. It's really just kind of rumor control at this point. So the market's just kind of trying to figure out who's going to make the first move is what it seems like. We've got the VIX slightly higher by about 40 cents back into the teens, which, that makes me happy. Anytime we start seeing volatility creep up, that gives us the opportunity to sell premium, and we aren't right in that earnings season. So this would be a good thing for the rest of us that like to sell premium. Some of the few occasions we've had that opportunity has been in and around earnings to get that high volatility. So it'd be nice to get some of that off season in a sense. And Tesla is driving higher, so it might be a good opportunity to start selling some premium against my long puts, which are doing nicely. All right, so Dow Jones up about 13 points. This is what I was talking about with the Dow Jones being higher on the day. The rest of the broader market, especially tech, getting crushed today. The flight to safety, where you take your money out of the more volatile stocks and go into the blue chip stocks, is what we're kind of seeing here. A bit of a rotation. And here we have the NASDAQ down almost 100 points today. Just a massive sell-off with Dorsey talking. Every time he says something, it seems like we get a downtick in Twitter. But that being said, that whole thing is kind of rolled through with the rest of the social medias there. All right, E-mini S&P is down 10 points on the day, but coming down to the 61.8 Fibonacci level. You can see it kissed it and bounced away. So that, again, is going to act as a major support. We can see when we had our extensions, we lined it up off of this top here. That's because that's going to be the major support resistance line. You can see it acted as resistance over here basically on the 21st, and then we've come back down and kissed it today, acting as support. All right, so that should hold pretty true. That 61 Fibonacci, anytime you see the 61.8 Fibonacci level, that is a major area that the market likes to go to. Again, here on the E-mini S&Ps, this is the 30-minute chart. Overnight inventory got short. Didn't really make a whole lot of attempt to flush them out. As you can see, they even got shorter right off the open. Maybe we could, or right before the open, you could say maybe they tried a little bit to get those guys out right around 10 o'clock Eastern, and it's starting to peter out a little bit. That little bounce is starting to slow down a little. All right, let's talk about the trades that I've done. I talked about Google yesterday. With this trade, I was looking to get out of it because I am short puts, or was short puts in there, and decided to pull the ripcord on it. I did pretty good on it. I was short this September, 1,100 puts in there, and I originally sold them for $5. Now I bought them back today for $2. It was a little bit better a few days earlier. Obviously, as you can see, the directional move and volatility starting to creep up with all of this stuff around Google. I didn't want to mess around anymore after some of the stuff that I was starting to hear on social media and everything else about regulation and this conspiracy stuff that's going on. I just want to be out of it. I don't care about all that news anymore, so I wanted to roll out of that. I was trying to get out of it yesterday. Probably could have gotten out a little bit better, but pulled the ripcord on that immediately this morning as soon as we started making a newer low there. So I got out for $2. It was one of the first trades of the day that I did. And then Costco is another one I pulled the ripcord on. Google, obviously, I made money on from if I sold it at $5, bought it back for $2. But in Costco, this was a loser. I had on the October 220 puts. I bought them for $3.30. I sold them out this morning for $1.54. So that was a loser on that one. It was basically a newer high. Probably should have gotten out of that yesterday, but it wasn't on my radar. So pulled the ripcord to get out today. And that's all I've done so far, other than check out yesterday's little segment I did on selling options. When is the right time to do it? I did that for Tiger Shark Trading. And then tomorrow I'm going to be doing a webinar on how to defend some of these big strategies that we have learned about over the past several months. So I'm going to talk about when they start to go against you, how you can be mechanical with some of these different option strategies in order to increase your probabilities of success, and duration to make sure that we have enough time to be right. Okay, so check that out at protraderstrategies.com. And if you can't take that, take that. Take it easy.